Hey guys, what's up? This is Francisco with Valareso Capital, and on today's video we're gonna go through the weekly watch list, and also we're gonna take a look at the market update. Remember guys that this video is for informational purposes only and is not financial advice, since it's based just on my personal opinion. Remember guys to like and subscribe, and also follow me on my Twitter account at Valareso Capital. One quick announcement guys, I'm gonna be traveling at the end of this week, so I'm gonna be out for almost 20 days. I'm gonna take just a quick trip to Europe. One of my friends is getting married, so we're gonna have kind of a Euro trip with my friends, so that's gonna be pretty cool. So don't expect any market videos or any updates during that time. As soon as I'm back, we're gonna get back to the market updates and everything. So expect some videos somewhere around mid-June when I'm back. First of all, guys, I just wanna talk a little bit about something that I have been working on, something pretty incredible, and I'm gonna show it to you right here in this chart for the ARK ETF. So right now you can see that I have these levels. I have the supply levels and I also have these demand levels. This is something that I have been working on for a while now. So if you remember my last videos, I used to draw these zones by hand, meaning that I will just go look for the zones, look for the patterns, and then I will draw the patterns using the tools in TradingView. So as you know, if we're doing something without any kind of coding, without any kind of automation, we're probably gonna we're more susceptible to making errors. So that's something very important to understand. So I wanted something to find supply levels and demand levels based on certain parameters that I always look for. So I was trying to code this thing for a while. I found some indicators, some amazing indicators in TradingView. A lot of them had an open source for the coding, but I was unable to create it for a couple of weeks. And then I was able to find an amazing coder in Twitter. We were able to get in contact and he helped me finish the coding for the indicator. It's working amazingly. And I'm pretty excited about it because it's an amazing tool that is gonna help me to better my entries for both my short positions and also my long positions in my stocks. So this is actually pretty amazing because it saves me a lot of time when analyzing any kind of charts, because as soon as I get into the chart, these levels are automated, so everything just pops and fills instantly when I open the chart, and that saves me hundreds and hundreds of hours of working, and it also saves me a lot of mistakes. So that's something that I'm super excited about. Supply and demand is something that I have been learning a lot, and is a great tool to incorporate and join with my trading, with my exhaustion kind of trading, basically meaning that I'm looking for pullbacks to buy or I'm looking for rallies to short. So this is actually something pretty excited. So this is something that I'm super excited about, and we finished this indicator on the weekend, and that's one of the reasons that I didn't make a weekend video, and that's one of the reasons that I'm doing the video right now. So back to the charts and back to the analysis. I just wanted to mention that, guys, because I'm pretty excited. So let's jump into the markets here. So what happened today? Well, today ARK had an amazing day. So ARK ETF was up almost 5% today, which I think that is actually pretty important to the markets, and I do consider this to be the first stages of a character change in ARK ETF, meaning that we already had the decline, meaning that we already had the stage 4. I think that right now we are kind of in the late stages of stage 1, which is accumulation. And the reason why, and some other people are already mentioned this on Twitter, which I find pretty fascinating, is that you can see right here this black EMA. This is the 200 daily moving average. We had a rally in ARK. We came to that 200 daily moving average. We got rejected. Then we tried again, and then we got rejected again. What is actually pretty amazing. Let me change the color. Let me change the color of my drawing tool. Let me choose something like orange. Yeah, that one's gonna work pretty fine. So what I find pretty fascinating is that we came here, this happened to look like a very strong rejection from those moving averages, but what happened is that we came right here into supply, into demand. So as soon as we came into demand, you can see that the buyers step in, we push this all the way back to supply, which is actually pretty important because this is starting to look like a confirmed double bottom. And why do I think that it starts to look like a confirmed double bottom? Because we reclaim all the exponential moving averages, and we also reclaim that 200 daily moving average, and we did it in a pretty bullish fashion. So this is actually looking pretty amazing. I do think that we're gonna see a moving arc. Probably we're gonna see a moving arc all the way to these highs right here of 45.46. But of course, we don't want to buy at supply, right? Because supply is resistance. So what we want to do is wait for ARC to perhaps pull back to this level right here. We want to see that wave start to come up, that 21 exponential moving wave is starting to come up. And then of course, if we happen to see a pullback to demand, that would also be an amazing opportunity. But I'm thinking that probably we're going to retest this level right here, and that's going to be an amazing opportunity. And remember, we might see a little bit more of strength coming into that gap at 41.86. But if we happen to see that, remember that this is a very strong level of supply. So that's what I'm watching in ARC, and let me just take this out. The next chart that I want to show you is GNK. The thing about GNK is that is the spider ETF for the high yield bonds. Basically these bonds are the junk bonds, meaning that these are bonds with a credit score that is really low. So meaning that they are a little bit more risky. So what is the expectation here with the GNK? Usually the JNK kind of give us a heads up of what we can expect about the market. And this is kind of the only red flag that I have right now because the price structure in the QQQ, in the SPY, and also the IWM that we're going to take a look at is actually pretty bullish. But the thing that I'm seeing right here in the JNK, in the high yield bonds, is that we're coming right into resistance at this level right here. So you can see that we're coming right against the 21 exponential moving average, a 21 exponential moving average wave, and we're also coming against some really important levels of anchor VWAPs. This is an anchor VWAP that is basically anchored from this recent swing right here at 94.83, and then of course I have another anchor VWAP at 86.28, and you can see that we kind of have those levels coming together right here into resistance. So the expectation is, if we happen to see a pullback in the high yield bonds, then we're probably gonna also see a pullback in the spiders, which is the SPY, and that usually means that we're probably gonna see a pullback in the entire market as a whole. So that's kind of the only red flag, or basically just a bearish flag that I'm seeing right now in the markets. We're probably gonna pull back, thinking that we're probably gonna find support at those lows, but this is kind of the only warning that I have. And of course, if you watch my indicator, my momentum indicator, I right now have both of the lines below the zero line, which means that we have a little bit more of a probability of continuing to the downside. So that's kind of the only warning, because the market of course is very extended. And if we take a look at the ISIC, which is the Nasdaq Composite, you can see right here that we had an amazing breakout. You can see right here that we had this very clear cup and handle. You can see right here that we had the breakout. We had an amazing move, but we're coming also into some very important levels of resistance. What do I mean by resistance? You can see right here that we have a gap open. That gap open tends to act as a vacuum, basically tends to act as a magnet for price, and when price hits those levels, we tend to see a lot of sellers. So we of course continue to move a little bit to the upside, but I think that we're probably gonna see a little bit of resistance here. Of course, if the Nasdaq Composite just decides to continue to go higher, we have some very strong levels of supply somewhere around 13,000. So my expectation is that we're probably gonna see a little bit of a pullback here. Now, how deep the pullback is gonna be, I don't know, but of course you understand, if you have been following the channel for a while, that the buy zone is gonna be that 21 exponential moving average wave. So anything close to that wave is going to be a good entry point and a great level to manage risk against. So in terms of momentum is pretty high. Momentum is looking pretty bullish. So I'm expecting continuation, but we're probably going to see a little bit of a pullback first before we continue into that 13,000 level in the Nasdaq Composite. Let's take a look at the SPY. As you know, the SPY is one of my favorite charts and is one of my favorite tools to trade, one of my favorite securities to trade. And what I'm seeing right now is a pretty bullish chart. And what I really like about it is that we are now starting to see that backup trend indicator turning green, which is basically giving us a heads up that any pullback into support is probably going to be a buying opportunity. So now, where do I want to buy this? You can see right here that we have a level of demand somewhere around 413. So that would be the ideal level to get bullish exposure here in the SPY. But anything into that first level of that 21 exponential moving average wave would also be a great level to buy. So somewhere around 1415, I think that would be a great level. Of course, I don't want to buy it here because, as you can see, this is a previous level of supply, and I just prefer to I don't like getting involved in breakouts. So if anything, I like to buy the support previous to the breakout, right? I just don't feel comfortable just buying the breakout straight away, because we tend to see a lot of volatility at those pivots, basically because we got a lot of algos trading the market. So we have to understand that, and I have found that the best levels to get bullish are at those demand levels. So those demand levels, once again, somewhere around 413, 415, that's going to be the level that I'm going to be watching for the SPY as support. Now, one of my favorite charts that I'm going to be watching for a setup is going to be the IWM. And why I'm going to be watching the IWM, right? Because of course, the Nasdaq Composite, the QQQ, a lot of those sectors, the XLK, IGB, those sectors are clearly outperforming the market. But I do think that they're really, really extended. So I'm going to be watching for a little bit of a catch up right here in the IWM. And what is it that I'm watching in this setup? First of all, you can see that right now that my momentum indicator is starting to cross to the upside. So that's something that we haven't seen since this moment right here. That's something that we haven't seen since the pullback and since the consolidation. So that is something that is really calling my attention. And then you can see right here that in terms of price action, in terms of price structure, you can see that my candles are starting to turn blue. When my candles start to turn blue, that means that we're starting to close above that 21 exponential moving average wave. That's when I get that change in the candle pattern, and that means that we're starting to see some changes in the structure of price action. Now, of course, I don't want to buy it right here because we have an anchor VWAP, and this anchor VWAP is anchored from this high right here at 199.26. So of course I don't want to get bullish exposure right against resistance. But if we happen to see a little bit of a pullback into this demand zone, which is going to be somewhere around 174.28, that's going to be an amazing opportunity to get long exposure for what could be a continuation to the upside and perhaps a close of this gap right here at 181.41. I think that could offer a great trade and a great level to manage risk against. So this is one of my favorite setups. You can also see that we have a squeeze. I do think that we have the possibility of seeing a test of the supply level right here at 185 plus. So I do think that there's a lot of potential. You can see that we have a base. Basically, this base has been forming for quite a while. And I'm actually looking for a little bit of a catch up right here in the Russell. You can also see the IWO with kind of the same pattern, which I think that is pretty fascinating, and it's actually pretty cool to see that the IWO, which is basically the Russell 2000 growth ETF, is actually outperforming the IWM. So any pullbacks into demand, I think they're going to be an amazing opportunity to get long. Of course, I prefer not to get long right here at supply. I'm going to be waiting for those pullbacks right here into that 21 exponential moving average wave, and of course into that demand level, which will be the best price to get before a possible continuation to the upside. And of course, in terms of momentum, you can see the squeeze, and you can see also the backup trend indicator that is also moving to the upside. So basically, in summary, guys, the market is looking pretty bullish. If we go back to the Nasdaq Composite, you can see that the Nasdaq Composite had an amazing breakout, but of course we are against resistance, and we have to acknowledge the fact that when price gets pretty extended, especially from this 21 exponential moving average wave, the probability of seeing a pullback is pretty high in the markets. So that's something that we have to understand, and we have to be patient and let the price come to us before we put any money into the market to work, because the only job that we have as traders is to be patient and to wait for the market to come to us, to come to our levels, and then when it does, we execute and then we take action. So once again, thank you so much, guys, for watching the video. I will be back, as I say, kind of mid-June, and then we're gonna continue with the market updates and everything, and I'm also gonna go more in depth into my indicators. I know that I have been mentioning that for a couple of videos now, but I was working pretty hard on this supply and demand coding, and now that we have it, I'm gonna be able to start looking at the other things that I want to share with you, and we have a lot of more coming to the channel. So make sure to like, subscribe, and I will see you on future videos, guys. Take care, and bye bye.